Sure.
That's right.
Here we go. Here we go. All right. We're going to get started in probably about a minute.
Okay.
We got Dan Wilcox here with the mortgage firm. And let's see, we're going live. We've got live on Facebook and YouTube. So we better behave, Dan.
That's it. We may wind up crashing the internet. Who knows?
That's right. You never know what's going to happen.
That's right.
So, one of the things I've been seeing is that, when this whole, I think we spoke probably, our last interview was probably beginning of COVID. It was probably beginning of April, wasn't it?
Yeah, that sounds about right that we did a group thing. So,
yeah. So I think what's interesting is that, I've been talking about what's going to be going on, and, lots happened over the last 3-4 months. And been also talking about kind of like a V-shaped recovery in the real estate market, where we saw a complete, like a 45-day, 60-day collapse. Hardly anything happened, where we would normally be doing, a handful of deals, every week. We might have done maybe 1 or 2 deals in a week, during a 4 or 5 week period. And then we've seen a sharp increase in activity, right? We've seen activity, and I want to talk to you about what kind of activity you've seen, what challenges you're seeing, and anything you can really elaborate on that's going to talk about, how can we educate people a little bit better?
Well, I think the easiest answer to that is keep doing the things we're good at, which is talking often throughout deals. So I think our viewpoint might have been just a little bit different, because right before all the COVID stuff started, rates had dropped naturally anyway. So volume had spiked, COVID went berserk, things, we all sort of just went,
yes.
So that kind of eased. And then a few new regulations implemented. Some made sense, some were a little overreaching, but they've really pretty well dialed those back. And I don't know that it's ever will return to a business as usual, but that's okay, because as long as things are continuing to get better, that's what we want to see. Simple hangups. When the IRS stopped doing the tax transcripts, we had to get really good at teaching the consumer to get that from the consumer side of things. So just being able to be nimble and shift on the fly and make those kind of adjustments helped a lot. So keeping communication going, not necessarily building in a huge amount of extra lead time and any contract time, but just being open about communication, saying if an appraisal is required, there are a certain number of appraisers. If it's going to be 10 days instead of 7 for them to get back, not that that's happened much, but I'm just saying communication about it if it pops up. So I've been looking at our numbers and tracking them along. We've had one exception and needed to move one closing date by a day for our closings in June. That was a specific buyer issue that was just late with documentation. That's a little challenging. Nobody ever likes that. But things are clicking, man. Things are rolling. Business, people are moving.
So Dan, before all this started, obviously we're looking, hindsight being 2020, we're seeing that, okay, everything ran pretty smoothly. Good job in really making that happen. What did you think was going to happen coming back, through this? You're, right? So you're a little bit surprised by what's going on.
I was in the financial services world, lending on the bank side as well through the last meltdown. And I wasn't as stressed this time because it didn't seem to have those artificial components to it the last time we saw this dire a shift in our specific part of the industry. Glenn, I'm not sure what I thought at the beginning. I spent a lot of time standing on the back porch looking out at the woods and the world and sort of thinking, is this bigger than even all of us think? I mean, you maybe reevaluate what's really important, and being close with people like and trust, doing business locally, supporting local businesses, man, that just makes me feel good. That's a good thing to do. That's what I'm going to do more of. So I wasn't really sure. I was kind of standing back. I'm always a little bit distrusting of any folks in way up leadership chains that appear to have all the answers. And that's not a political statement of any kind. It's just I'm a skeptical person. And I just wanted to see, kind of soak up, what were they saying? What was this group saying? And then make choices for myself, my family, our office, and locally. That seems like the wisest approach. And I'm pretty proud of our part of Florida. I think we're doing things really well.
Did you anticipate any, delays on the appraisal side, on underwriting? Did you think that was going to happen through all this?
With the spike in volume, yes, because those couple of days before the COVID stuff really went crazy and rates had dipped anyway, that massive spike in refi volume, just get the mental picture of the watermelon going through the garden hose. I mean, it's just a massive number on a system that's only designed nationally to handle so much per year. It's just a huge number. Most has been digested. Rates are still low. Lots of refi action still happening. But internally, we've certainly prioritized it. Refis are great. We're going to take care of our refi customers, no doubt about it. Purchase is the priority in our business, period. We're going to meet closing dates for purchases. The logistics, there's so many people involved. We don't schedule closing refis for the end of the month. Just keep it out of the way. Just think it through. Let's talk about it. Let's talk to our borrower about it, those kind of things. So I think the huge spike, I think everybody was like, whoa, didn't think it was going to be that big. What is continuing to happen really just needs to be, okay, now we've even improved our good processes and made them better. Let's keep on rolling.
So what would you say when you say a huge spike, give everybody kind of a little bit of perspective. What are we talking about? What's the difference in refi business now versus refi business
normal? There's always some degree of refi going on, no matter what rates are. There's always going to be that need for that tool in the marketplace. Rough numbers tell us about 60% of the mortgages in the U.S. are at 4.5% or above. I looked at a 30-year rate and term refi for a 740 credit score or higher on a primary residence right before I jumped on the meeting with you. Low threes, no points. Mathematically, 60% of the mortgages in the U.S. should refinance, mathematically speaking, just on that simple math. That translates, though, to about 5 or 6 times the annual volume that the lending system in this country handles on any given year. I don't have a magic wand for that. So what does that make us do? Well, we've got to prioritize. We've got to just get better at things. We got lots to do and keep working through. So, I mean, the numbers are astonishingly large, but it makes me extra happy that we're happy to serve our refi clients and give them our best advice and get their CPA and financial advisor involved, because sometimes it makes sense not to refi.
Let's talk about that. So
that's sound advice.
When is it a good time to refi?
I lost the middle of what you said. When is it?
When is a good time to refi, and when is it not a good time to refi? A lot of people have that question.
Well, and it's such an individual answer that it's worth having that conversation and looking at the math, because lots of things factor in. What's the end goal? Is it really to pay off the house? Well, then let's not look at resetting a 30-year clock. Is it pulling equity out? Is it eliminating other debt? Could it make sense to look at using some leverage for purchasing a second home or an investment property? I mean, lots of different scenarios, but the biggest ones where we could, advise people this may not make sense to do right now is if they're not going to stay in the home long enough to break even and then be making money. And it's surprising how many people just sort of get pulled into that, what do the kids call it? FOMO, fear of missing out. They think they need to do it just because it seems like everybody's doing it. Not always the case.
Makes sense. And, you know, typically what we've recommended is at least, you know, if you're going to stay in the home at least 3+ years. And, you know, and like you said, and I'm advocating for everybody to work on paying off their mortgage. And, you know, obviously a lot of people need a mortgage to get started, but we should be working on that and not expanding it. I think as a society, we're kind of addicted to debt, and, you know, that's not necessarily the best thing in the world. So
I'm hoping that's a lesson that a lot of people have picked up through this.
Yeah, of course.
You know, simpler things are, you know, they're okay too.
That's right. That's all good. So, and so one more question about that. I know a lot of people will have that question. What's the interest rate difference? Now, if you're, I'm a person who's going to be planning on staying in my house for, let's say, more than 3 years. I'm not going anywhere. I'm not anticipating anything. And I've got a 4.5 interest rate. Is it a good time to actually refi?
Without knowing the rest of the details, you could either say yes or no. I'd rather see the numbers all the way through and let the math guide that decision, not let it be emotional. Because that's the part I like about the math. The math either really supports the decision either way. So if you've been in the house a few years, you're going to stay for more than 3, you're easily going to recoup your costs. I'd rather start playing with numbers on shortening the term. Rates are so much lower now. Maybe it makes sense. Is the payment comfortable? Let's see how short we can get it by keeping the payment the same. Because if it's really not payment relief, that's where the big savings comes from. It's shortening the term of the loan. The savings is just enormous. And the tools we have to calculate those numbers, man, we can just let the math guide that decision.
What are we looking like on a 15? You know, for people that, you know, let's say they just got into the home in the last 5 years. Obviously, let's say they're in a 30, and let's say it does make sense to go into a 15 because the payment could be pretty similar, right?
Certainly could be, because if it's, you know, somewhere in the 2 to 4 year ago range, that's where rates had kind of crept back up, and we're near 5 in some cases. You may be dropping on a 15-year over 2 points, maybe more than that. If it's in the high 2s, I always hesitate to say a specific number because, man, that's the number people hear, and that just it's so personal. It's worth getting the right info. But let's just say it's the low 3s, just a little lower than a 30. Man, that 15 payment. Oh my gosh, the savings will, you know, makes my hair stand up.
Yeah. I'm seeing that. Mine too. See,
it's exciting.
So, 2 bald guys on an interview, man. I just
told you we're going to burn down the internet.
That's right. So there, you know, obviously there is a difference. Obviously, the 15 and the 30, you're going to save a lot of interest, and actually, the interest rates are typically lower too, aren't they? Right. On a 15 when you're hearing. Right?
And once we're this low, it's just going to be a smaller difference. There's just not as much room to go.
Yeah, makes sense. So what do you see as the biggest challenge right now? What's your biggest challenge?
Man, we're looking to grow. We've implemented and added some great teammates here, and the team approach so that clients aren't waiting. They're not waiting for answers. They're not waiting for pre-quals. Being extra proactive on communication. Man, I'm looking for additional great people to add to our team to help us raise that level of service even further. So that really is our number one challenge right now, is the whole world's focused on rates and refis and buying homes. Awesome. Help us from the inside. So if you know someone that's in the wrong place and I should have lunch with them or chat with them or that sort of thing without it being uncool, I would welcome that referral and introduction. So
Good. Well, you're speaking to the right group. I'm seeing here a question: 20 or a 25-year refi, or only a 15? Is one question I'm seeing on Facebook right now. What are the options when people want to refi? How about that?
Oh yeah. Oh, 10, 15, 20, 30.
Yeah.
I mean, there's plenty of different lengths out there. In looking at the refi discussion, people shouldn't overlook the difference in doing things like a biweekly payment either. So there's definitely more than one way to get there. It's not always just cut down the term as far as you can, because sometimes that payment just becomes prohibitive there. So, biweekly payments cut a little over 7 years off a 30-year mortgage by itself. If that fits people's pay cycles, man, that's a thing of beauty. That is just consistency and it may not be the first swing of the axe that takes the big oak down, but it's going to be one of them. And that's what happens. It's beautiful. It's just gets it knocked out.
So one of the things that I'm seeing pretty much not only locally, here in Central Florida in the villages, but also around the country is, the amount of business being done now in real estate. It seems like it's kind of like an accordion effect. All the business that was going to be done in April and May and even parts of June that didn't get done is now being done, plus the normal business during the summer. So it's compounded. Is that something you're seeing as well?
Yes. And that's really about the most succinct, best description I've heard of it so far. That feels exactly like what's happening. I mean, we're seeing a surprising number of clients accelerate their plans to get here to our part of Florida, specifically because of the last 100 or so days of their own evaluation. I mean, we've had several that have said, you know what? I was going to work 2 more years. Nope. I'm moving south. For sale sign in the yard up there, man, let's go. So
yes.
Yeah. Almost a spike on top of a spike.
Mm-hmm. And everything I'm seeing right now, it looks like it's going to be like that for a little bit. I guess the predictions are it's going to be like that until the election, right? Like it's going to get really weird, right? Yeah. Weirder. Let's say weirder. It's already weird, but it's going to get weirder. And right. So get your business done now before October 15th is the word, right? So who knows what's going to happen then? Good. Dan, actually, Pat, seeing Pat Serafino here saying, is there a mortgage broker better than Dan? And then he answers his own question and says, no.
I was going to say, Pat's a smart guy. He knows the answer is a resounding
That's right. It was a little pause. He paused. It was a little ... I'm like, nope, there isn't one. So that's great. That's great. Educational purposes. How can the public get themselves ready, in advance, when they're trying to purchase a home? What are some things that they can do to really speed up the process?
Early conversation with a lender. Do the work to get pre-approved. It is so worth it. It's a little bit of documentation, most of which we can help them with automated tools, so that when they find the right house, if we get a property inspection waiver, why don't we close in 2 weeks instead of 45 days with the rest of the world taking so long? So having that conversation early on so that they know what they're going to be comfortable with in buying as far as payment, out of pockets, they're going to be looking at the right priced homes, and everything just gets more efficient. We've got a couple of tech type tools. I don't want to roll one of them out. I'd rather you saw it first before we talk too much about it, but it's a very helpful, easier way to connect people. Digital business card type thing is what I'm talking about. Just because the sooner we can start that communication, but more important than just completing the pre-approval, we want to solidify the relationship to the referral partner that connected us. I wasn't going to bring this up necessarily, but this has been on my brain through these last 100 days. I'm a loyal person. It's just how I'm wired. I I've talked a lot about my dad over the years. You guys know he had a long Air Force career and just distinguished officer, all that stuff. I'm a loyal person. I appreciate loyalty. I want clients to stay with the realtor they started with. I understand that locally, having the way the Villages does things is different. I get all that. There's just so much value in what those of us who work together bring to the consumer locally and the local community. There's no way to put a price tag on that. But I like talking great about people. You just talked about Pat bringing up, when Pat and Melissa refer somebody to us, do you know how much I like talking about how much I like Pat and Melissa? And it's genuine, it's sincere. I mean, Pat is the reason I wear these money pattern things. That's no joke. I mean, I think developing that rapport, having that, and just, people don't do that anymore. People would rather tear each other down or talk trash on social media. I got no interest in that. I'd rather edify you, build you up, and do it because I truly believe it, not because I'm trying to blow smoke. Does that make sense?
It does. 100%.
We're big on that in our team. Are we perfect at it? I don't know anybody's ever going to be perfect at developing loyalty, but man, it's important to us. It is important to take care of that and nurture it. And it may be a wonderful transaction, but that relationship's going to go on for a long time. And man, that's just so important. That's a long-winded answer to your question, by the way.
Good. That's perfect. I think that's a great answer. Awesome. So is there anything else that you can tell realtors? So the original question was on how people can get ready, the public can get themselves ready to get a loan, get a mortgage. What about realtors? What can they do to actually kind of grease the skids?
In which, help me with what you mean. What I want to make sure I understand the question.
So sometimes we have, in this industry, I've seen it where realtors can get in the way of a transaction. Sometimes that happens, obviously. How can a realtor help you get things done easier?
Let us be your expert answer, folks. Don't try to be the lending expert. You be the expert at the communication between both parties and the lots of important details in the contract and local knowledge and education. Defer those questions. Complement that question. Oh, Mr. and Mrs. Buyer, that's an awesome question. I'm going to make sure that our team over at the mortgage firm has that at the top of their list, because I don't know the answer to that, but that's a great question. I'd like to know that too. Set us up to look like we're walking in to get a great answer. So to me, that's a consultative approach to selling, which is what we all should be doing. People are pretty smart as a whole. Most people, given the right information, will make a smart decision, especially if they're working with somebody that they know, they like, and they trust. That's what I would do. Defer it to the expert. Don't be the expert.
So in that case, what should a realtor know? What should a realtor know? So I like your answer. I think that's correct. In having you be a sort of a team member that we can say, you know what, we've got, here's Dan. This is the mortgage expert, and this is the person that's going to be able to answer that question. What should a realtor know?
From a lending perspective, I think less is better. I've just seen that if you share a little bit of info, it leads to more questions, and then you've got this pulling effect of the piece of yarn on the sweater, and all of a sudden the sweater's gone. And so is the person all of a sudden. I don't want it to go that way. I think it really only takes once or twice of saying, man, that's a great question. That's exactly why I want you to talk to the the team that we trust so much locally, they're right up by Little Joey's on 441 around the corner. Do you want me to see if we can get them on the phone? I mean, they answer the phone all day. That's what they do. I would just that's what I think is the right answer. And to have some personal general knowledge for comfort, okay, just be careful. Just be careful.
Can be dangerous.
That's right.
So what do you see if you had a crystal ball based on your experience? You've been doing this a while. What do you see happening over the next, let's say 12 to 18 months? Would it be smart for people to wait to refi, to wait to purchase? Is this the best time to purchase? What do you see?
I think it's a great time if it's the right thing for the individual person to do, because we only know the best day was once it's passed, which doesn't do you any good whatsoever. So do I think people should go crazy and borrow as much as they can and max out buying ability and payment and sucking every ounce of equity out of everything? No, that doesn't sound like a reasonable thing to do at any time, certainly not now. Do I think there's a lot of things still in our favor? 10,000 baby boomers turning 65 every day for another, decade or so. Some portion of those people want to live within, how far apart are you and I right now? 3 miles as the crow flies, maybe? Within 45-minute drive of us in any one direction. Our weather's still great. Yes, there's going to be elections. Yes, there's going to be economic cycles. Yeah, I hope we never see another pandemic in our lifetimes, but all right, we know what that looks like now. These blips on the radar, man, things are good. If you were here 25, 30 years ago, there were cows and orange trees between where you are sitting, sir, and where I am sitting. None of this hardly was here. It's amazing what's happened locally. The growth plans I read, and we got about 20 years of this pace of growth going. Yeah, I think today's a good day to buy a house or refi a house. What do you think?
Yeah, it makes sense. Well, and that's what I talk to my people about. It's sometimes it's about the numbers when it comes down to refi. Obviously, that's what we're looking at. But when it comes down to purchase, it's a life decision. You shouldn't be buying a house because the interest rates are low.
Right.
Right. You should be buying a house because it's the right fit. It's you need more room or you need less room or you don't like your location. It should never be predicated on, you know what, I love our house, but the interest rates are low, so we should go buy one. Like, it doesn't make any sense. Right. That's not logical. So on a refi basis, that makes sense. I think Pat's actually going through the refi basis. He's going through that process himself. So look, I think that makes a lot of sense. Dan, how can people find you?
Our office number is the best, 352-775-8233. That's phone or text. So that's call or text. Both numbers. And 2 L's in Wilcox. Just Google will find me instantly.
I thought you were going to say, go find me at Little Joey's Pizza or something.
Oh, man, hey, that's something else. I didn't. This vest, I went the opposite way during quarantine. There is 74 pounds less of me than there was February 2 years ago. So
you do look trimmer.
I've just stayed healthier, stayed a non-drinker, and exercise a little. So won't be able to do it. I did have a salad. I'll not be there for dinner. So
that's great. That's great. Anything else you want to share with the group?
I'll share that offline with you about that digital business card, man. One of the favorite things that we're doing right now, we're pet people. I've been a pet person since I was a kid. My wife Lori is too. One of the things we do when our customers make application with us, they get a text. It asks them about their pets. It asks them their name. Are they cats, dogs? The whole, are they small, medium, large? It takes them through this nice little thing. And it happens at the beginning because we really expect they're going to forget. So then their loan closes and funds, and the first of the following month, they go in the mail. So it's going to be probably somewhere between 2 and 6 weeks from their closing, depending on it was. Their animals are going to get correspondence wherever they told us to mail them, either the new house or if they're still wherever home is. But it's going to be a card from our pet ambassador at our corporate office that says, oh, we're worried about your safety, and we just love this thing. So it's from our pet to their pets with the updated collar tag for their pet's new home.
That's great.
If you're a pet person and that little furry thing has ever been out of your sight in an unfamiliar territory, there aren't many things that will cause your heart to leap from your chest quite like that. It is just such a cool thing. I love stuff like that. Little things are giant things, man. Very cool stuff.
I love it. I love it. And hey, you know what? More video from you, man. More video.
Yes. On the way.
Dan, good job. Appreciate it.
Yes, sir.
Thanks for being here.
Great to see you, man.
Likewise.